Hello, hello. My name is Tandeka Namvete, and I'm the External Engagement Director at Spencer Educational Foundation. What is Spencer Educational Foundation? We are a nonprofit organization that supports future leaders of our industry. So that's students who wish to pursue careers within risk management, insurance, actuarial science, and we do so through various programs such as scholarships, internship grants, general grants for universities and other nonprofit organizations, curriculum development at universities, and several other experiential learning opportunities for students. We do have a wonderful guest speaker that is here with us today. Sarah Shanondet is director of the private client division at Burns and Wilcox. So, Sarah, I will hand it over to you to share your screen and perhaps tell us a little bit more about yourself.
Yeah, thank you so much, Tindeka, for having me. Thank you, Spencer. Hi, everyone. Nice to meet you. Whether you are on video or not, it's really good to see you. My name is Sarah Chandonnet. I am the Director of Underwriting within the Private Client Division here at Burns and Wilcox. Located just north of Detroit, Michigan. So our headquarters is actually in Farmington Hills, Michigan. I'm home today, so I'm about 20 miles north of the office, but again, our Burns and Wilcox headquarters is in Farmington Hills, Michigan, and we have over 50 offices within the US. We're also a global company, so we have boots on the ground in London, Brazil, all over the world, really. So thanks for having me today. I want to go over a little bit about myself, Burns and Wilcox, and then we will get into the fun topic of private client insurance, kind of what it is, who our clientele may be, what we often see from a market perspective, from a clientele perspective, and then really, what our bread and butter is. So what we're looking at on a day-to-day basis, what our daily roles look like. And I have a few members of my team actually on the call, which I really appreciate, Alexa and Zach. But we are sprinkled strategically throughout the country. So my specific team, we have folks in Michigan, Ohio, Florida, Tennessee, Little Rock, Arkansas. So we're sprinkled strategically throughout the country to service private client agents. Okay. So we'll go over all of that today. Throughout the call, if you have any questions, you can take yourself off mute. You can raise your hand, whatever you'd like. I'd like this to be interactive. I will ask you a few questions, but let me know if you have any questions and happy to discuss. So let's get started. Okay, Burns and Wilcox. Burns and Wilcox, like I mentioned, has over 50 offices in the US. We have 6 offices, I think, in California, I believe. Headquarters is in Farmington Hills, Michigan. I've been with Burns and Wilcox. It'll be 9 years in October. Originally, I did not want to be in insurance. I was going to be a teacher. A lot of folks say, though, that insurance is a family business, and my journey is no different. My dad actually owns an insurance company and previously owned a wholesale MGA, so I kind of got roped into it at an early age. From age like 12 to 16 or so, I was working on the policy processing team in his office. So a lot of the things that I started doing right out of college, I actually had been doing at a young age. So my brother's in insurance, my younger sister's in insurance, my dad's in insurance. My grandpa actually worked at Lloyd's of London for about 30 years. So it is a family industry, and I am living proof of that. Started working at Burns and Wilcox a year after I got out of college. Originally, I had thought I wanted some retail experience, so I worked for a small independent agency doing personal lines. So would get a lot of auto applications, would get a lot of, smaller homeowners applications, thought it was really interesting, and definitely knew I wanted to stay in personal lines. Then got a job at Burns working as an assistant underwriter. And once I started as an assistant underwriter, few years in, became an underwriter, things like that, realized we were looking at some really interesting risks. Think Airbnbs were getting really big, vacant homes were getting really big, homes with losses, high profile clientele, all very interesting things that we were looking at. And Burns and Wilcox actually created a division dedicated to private client business. Okay, so we'll go into exactly what that means, what we look at, but started my career basically in the wholesale space with Burns and Wilcox, and have now worked up to be the director of underwriting for the private client division, which is a team that's remote within Burns and Wilcox, but one of the most successful teams within the entire organization. So we're newer to the insurance business, but something that I want to point out that's very interesting is when I first started, folks in the industry said, learn commercial, learn personal, learn everything that you can, find out what you like. So I was cross-trained amongst a lot of departments. 2 years fast forward, and everyone said, specialize, specialize. You need to find a specialty. Professional lines, whether it was, D&O and healthcare, whether it was environmental, everyone within the company, it seemed like, was finding a specialty. And this was my opportunity to find one. So private client business is a specialty niche business within personal lines. When you think personal lines insurance, I'm sure folks think, State Farm or Allstate, or those companies, AAA, that you put business with. It's probably low touch. It's just what you've always done. But the things that we see on our end are really specialty risks that involve a lot of negotiation, sales, strategy, and partnership. So let's get into that. If you guys have any questions about Burns and Wilcox specifically, or the private client team, Tendeka is going to share my LinkedIn profile at the end. So please connect with me. We love to connect. We're recruiting heavily in all 50 states. We love young talent. We love all talent. We've got some really good programs within Burns and Wilcox, whether it's young producer, we have leadership development teams, things like that. So we are really looking for young talent and fostering it. So please, please connect with me. Okay, if no one has any questions, we're going to get into private client insurance, kind of what it is, what we look at a day-to-day basis. I don't think we'll take 45 minutes, but I tend to ramble, so cut me off if you need to, okay? All right. So what is private client insurance? I kind of touched on this earlier, as it's a personal lines niche. So private client is a personal lines niche product. Now, this is focused not only on clientele, but agents, okay? So let's talk first about clientele. Can someone put in the chat or raise your hand? What do you think a private client is?
So I'll take a shot. I think
Right.
actually Dylan
Dylan,
raised his
yeah.
hand. Go for it.
I was saying maybe it's like people who can't afford like regular auto insurance, so they go to the private firms to get a better price or more of a specialized kind of deal.
Okay. That's a good thought. Tendeka, what were you going to say?
Yeah, I was going to say an individual, just an individual person. It could be anybody.
Right. Okay, so it's kind of a combination of both. Neither of your answers are incorrect. When you think of private client insurance, think of, if you turn on ESPN today, probably 80% of those athletes on the TV are our clients. If you turn on e-news, probably 80% of those clients are our clients. So think more so celebrities, professional athletes, directors, doctors, attorneys, CEOs, folks with a large public platform. For some reason, they can't get insurance. Sometimes it's a profile concern. So the client might be, trigger happy on Twitter and might not present themselves well managed. They might have, a lot of losses at their home. A lot of these clients have nannies in the home or housekeepers or things like that they may have filed claims against. There might be a lot of water damage in their home. Or it could potentially just be they live in the middle of Los Angeles County, the brushiest area in the entire United States, and they live in a $20 million home. They can't find insurance. So our clientele is anyone that ranges from a professional athlete to an actor, musician, director, anyone in Hollywood entertainment, all the way to, doctors, attorneys, CEOs. What do all of these clientele have in common? They all have centralized risk management teams. And we'll go over what that kind of looks like. But private client insurance is a combination of the individual and the agent. So agents that we're working with typically have represented their client for 20 plus years. They've been in this industry a long time. In most cases, they've been to the home. They've looked at their jewelry schedule. They personally know the client and have a relationship. So, the agents that we work with in the E&S insurance space, what they do is they have relationships with the best admitted markets in the business. Think, Chubb, AIG, Nationwide Private Client, some of these very high value carriers that have expertise in private client insurance. All they do is offer the bells and whistles. They want the best clients. They have a strong partnership with our agents. If our agents can't find a solution for some of their nearest and dearest clients, they then come to the E&S space where Burns and Wilcox comes in, helps build, maintain relationships with E&S carriers or Lloyd's of London, and we broker deals for them. So we're kind of the middleman, if you will. So let me just break this down one more time. Agent in Los Angeles. They may have a high profile actress who's in the press. She buys a $10 million home in the middle of brush. She can't find a solution because all of the admitted markets in California in that location are on moratorium or won't write new business in California because of the brush concern, because of other factors, things like that. Our agent exhausts their markets on the admitted side, comes to Burns and Wilcox private client division, and reaches out to see what we're able to find a solution for. So we are really the I don't want to call it last resort, but if one of our agents can find an admitted solution from a rate and coverage perspective, that's always going to be the best option from the client for the client. When you move to the E&S space, excess and surplus line space to us, typically you're not getting the bells and whistles of that policy. And that's just the state of the business. So say you may write something with Chubb or a high value carrier, and the client's getting, $1 million worth of water damage coverage. And then you come to us and we potentially may only be able to offer you $250K. So still, it's a good policy from a rate and coverage perspective. It may be the only option that your client would have, but we are not looking to compete with admitted markets. We're here to find a solution when we have your toughest clients. And that's typically what we're doing on our end is the admitted market's exhausted. We need to find a solution. Okay, so let's summarize this slide really quick. Private client insurance is private client clientele, which we went over, actors, directors, musicians, celebrities. Unfortunately, I really wish I could tell you my favorite clients, but I cannot. Most are under NDA. I would say just turn on the TV, put on e-news, find someone on Instagram. Chances are we write them, and it's very exciting and interesting. My job is filled with the most interesting, exciting news all day. Typically, before a celebrity hits e-news that they purchased a new home, I've gotten the chance to look at the photos of it, the inspection. We knew they were purchasing it 2 weeks ago. So the same thing with like divorces and things like that with celebrities. We know these things are happening before they hit the press. So it's an exciting role. So clientele, we went over types of agents. I want to just point out one more thing as well, because we get this question asked a lot. Can't everyone do private client insurance? The answer is yes. Technically, everyone could, meaning all agents have the ability to utilize a wholesaler and that kind of thing. You want to have expertise though. So these agents that have been working with business managers and family offices, which we'll go over in a minute, they have a different level of expertise than an agent that was working in Michigan that met someone that played on the Lions one time has. See what I mean? So expertise in your area is so important. That's why I encourage this continuing education within Spencer, but also continuing education within any arena that you're working in is so important. We work on our expertise daily to make sure we're the best of the best. So I would encourage you, if any of you have the ability to add to your craft, please do it. It's great, game changing, really. Okay. Everyone likes when I put this slide up. They look around. So I'm sure most of you can tell me who these clients are on this screen. Not saying any of them are clients. They potentially could be. They potentially may not be. But this is the type of clientele we're looking at here. Want to make a few mentions, and we're going to talk about this in the next slide. But these clients all have certain things in common. I'm going to mention them now. They're all active on social media. Why would that matter for a homeowner's quote? We'll get into it. They all have extremely high public profiles. They all have over maybe 1 million followers on Twitter, if they're on Twitter, and Instagram, TikTok, things like that. They all have businesses outside of what they currently do. So they may be a professional golfer, they may be an actress, they may be an NBA basketball player, director. They also have additional businesses, okay? So look at the screen. Let me know if anyone has any questions. But when I say celebrities, this is what I'm thinking about. What I don't have here is the new style of celebrity that's with us present day. And that is the reality stars. So a lot of folks call them unskilled celebrities, which I don't love the term. I think they got there for a reason. I'm sure they're skilled. They have good management in place. They're very successful. However, they're famous for being famous. So that's another category here that I don't really mention in celebrities, but we have a lot of, 19 to 21-year-old TikTok stars that we're writing, or, YouTube stars, or folks that are just posting videos online. Or then we have, Bravo with all of these housewives and TV shows and the Kardashians, all of these things that bring a whole different level of liability and exposure into the game that we'll also talk about here today. So when I'm talking about celebrities, I'm thinking about these individuals here on the screen. Again, I wish I could go into who my favorite is and who takes risk mitigation seriously and who lives where, but unfortunately we can't. But read between the lines. They all live in very nice, well-kept homes. Most, if not all, celebrities live, I'd say 60% live in Los Angeles County, California, which think brush, think high TIVs, think cash offers. So technically they might not need insurance, things like that. Okay. So this, when I'm speaking about celebrities, this is what I'm kind of talking about. Now I want to talk about exposures in addition to the celebrity clientele that we look at. So you'll see here, large home. There's some women posing on red carpets with some big bling on, okay, that they're borrowing from a jeweler. We've got cosmetics, we've got luxury handbags, we've got luxury vehicles. Who's insuring all of these items? This is what we do, okay? So not only are we looking at the client and insuring them from a homeowner's perspective, we're looking at the client. We want it all. So we're looking at their homeowners, we're looking at their liability, we're looking at their personal inland marine, meaning I'm looking at every article of jewelry that the client has, their entire schedule, all of their fine arts they've ever purchased, their vehicles in their garage. Well, who's covering those? That kind of thing. So we as a company, specifically within the private client team, when we're looking at one piece of business, we're looking at the clientele entirely. So celebrities specifically have a lot of exposures, okay? We'll go into the social media aspect here in a second, but these are things that I automatically think of when we're looking at a new piece of business. If we get a homeowner submission, we're asking immediately, where's the liability? Where's the collections? What are they doing? Everyone has a secondary home. Most, if not all of the folks that our clientele live in the Midwest have a home in Florida. Or, if they live in LA, they typically have a home in Palm Springs or a condo in San Francisco, or maybe a penthouse in New York, or a home in the Hamptons. So we're looking at all of those exposures, and it's really, really interesting to do that because that helps us sell an account. So the more that we know about the client, the more better represented the client is, and the more we can tell about the account, the better off we're going to be on our end. Okay, so I kind of went over this. We're going to break this into exposures we cover on our end. So this is the day in, day out underwriting mentality. So technically, I've talked a lot about sales and negotiating, but I'm going to tell you the first day I walked into Burns and Wilcox, my manager said, underwriting is a combination of sales and underwriting. It's not just underwriting. You're not just sitting at a desk, putting in some numbers, looking at exposures. You need to be able to sell, negotiate, and review risks entirely, but also be able to follow carrier guidelines, underwrite appropriately, and maintain a great loss ratio with a great book of business. So it's a combination. It's a hard job. Underwriters have a hard job, but it is so, so unique and interesting and fun, especially on our side of the business. So we're going to go over property, liability, and then personal, inland, marine. So those are the fun ones. And then these are some underwriting factors that we look at. So mentioned this already, social media is a huge, huge, huge factor. Right when we get a risk across our desk, we look up the client. We do not only a wiki search, but we look up their Instagram, their TikTok, their Twitter to see exactly what's going on with them in the press, how they're presenting themselves, what they're posting online, because that could potentially hinder getting them terms. Okay. So I'll say this multiple times, we want well-managed, established clients. Sometimes they're hard to come by. We'll go over what that looks like, but that would mean to me, you maintain a very well-established social media profile. You're posting on Instagram regularly, that's fine, but you're not flashing your $2 million ring you just purchased. And you're not buying your mom a $300,000 Ferrari with the first contract you ever get at your rookie season. And you're not purchasing, I saw this article, and I can say this because he's not currently our client, but there was a actor in the press recently that said he was purchasing $50,000 worth of wine a month. I mean, reckless spending. So things like that we look at, and we're a little bit of stalkers on our end, but if something's going on in social media, you bet we're going to find out about it. And we want to make sure that we're presenting the risk appropriately on our end. So think of social media as a big factor for not only liability or homeowners, but for negotiating terms for a client. So we want to know how they're, describing themselves in the press, what the perception is of them, etc. Location of risk. This is really, really a big one. I know we mentioned LA County quite a bit. Think of Palm Beach, Florida. Think of Tri-County, Florida. We've had quite a few hurricanes going on. We have brush on the West Coast. We have wind concerns in the South. We have, capacity concerns in New York City. So where the client lives is a big, big concern of ours. That's the second thing that we do. So first we look up the client, then we look, where do they live? Where are they maintaining their business? Where are they, traveling, travel habits, things like that. In 2021, when COVID was happening, we saw about 60% of an increase of submissions on the West Coast, not in LA County, in Jackson Hole, in Wyoming, in Montana. Everyone was buying a secondary home on a ranch. It was insane. So that kind of thing, PC9s and 10s exposures. Location of risk is really, really important when we're underwriting an individual. Did anyone have any questions
Yeah,
Yes.
Dylan has a question.
Hi,
He was
Dylan.
raising his hand. Go for it.
I had one quick question. I was kind of curious. How if you have what's called insuring an artist, right? They're just getting started. They look good. They seem good. But then after you insure the negotiation and get their price, they turn south. They start spending recklessly. They start doing things that not really have a good image or reputation. And all that money, even though they're bringing in the money, their reputation is getting worse and worse in their spending habits. Does that change how much you charge them? Or is that negotiation already set in steel?
So if a contract is already set in stone and we bind the policy, unfortunately it's set in stone. So we would be on the risk for a year. And this happens a lot with rookie athletes or younger musicians, specifically in the Florida area. They come into some money, which they've never had before. And whether it's reckless spending or, driving activity that they start getting, DUIs or this or that, whatever it may be, they hinder their driving activity. They're then reckless spending. They've then purchased 3 homes. They may go bankrupt. Unfortunately, we're still on the risk for a year. What I will tell you is at renewal, we set expectations with our agents up front. So what that means is we would probably have to non-renew the account because the client is not managing themselves well. And this is a perfect segue into what a well-managed individual is. And I think it's on another slide, but this is a good opportunity to talk about this now. Typically when clients enter the entertainment or professional athlete industry, they have what's called an agent. And then they also have typically a business manager or a family office that they work with. So that family office or business manager typically has a risk management person on staff that advocates for all of the clients. So say, this person got drafted, they're a rookie and they just got drafted last week. This week, they are roundtabling with their agent, their business manager, the risk manager, the individual themselves, and they have an accountant, an entire team around trying to educate the client who's never had this much money, who now has come into a ton of wealth and has to make a lot of decisions. They need to be managed and they need to be taught how to proceed and what to do. I'm thinking of this show right now, and I'm not sure if a lot of you are familiar with it, but it's called The Hills, which I might be dating myself. I'm sure some of you know it. The Hills, it was on MTV, and there was a actual couple on The Hills that got quite a bit of wealth from the show and ended up becoming bankrupt because they fired their business manager right away. So they were making purchases and things like that that weren't adding up, or they weren't making the right purchases or financial decisions. So typically our top clients are well managed. They have a family office backing or a business manager making business decisions for them. So typically when we offer terms or a quote to our clientele, it's not going to the client. It's going to their business manager team. They're presenting it to the client. They're adding value in their 2 cents, asking any questions need be, and they're representing the client. Typically our clientele as well, as far as like social media aspect goes, they're not tweeting from their own Twitter and they're not posting on their own Instagram. They have a team, a social media team that's doing it for them. Anytime that there's not a family office or a business manager or someone calling the shots involved, that gets a little dicey. So anytime we notice we get a client that may not have adequate representation, we might suggest a business manager or family office that we work with, or an agent that I mentioned has dealt with clients like this for 20 plus years. We will direct them that way to make sure that they have adequate coverage in place and representation, because that's so important, especially with these contracts these days and the money that these clientele are getting. They need to be educated 100%. Good question, Dylan.
Yeah, great question.
Okay, so protections in place, travel habits, acquisition habits, geography, and risk mitigation. These kind of all go hand in hand. I'm going to go a little quickly through the rest of the slide. Travel habits. So say we cover jewelry for a client, and the client potentially is wearing the jewelry when they're traveling. So they're on an airplane and they're wearing $3 million worth of jewelry, and they lose a bracelet in the airport. Okay, this happens so much. Or client has a bunch of couture collections, very, very nice Louis Vuitton handbags in a roller bag that they're carrying in the airport. And they go to the bathroom and they leave the roller bag in the airport. they've totally forget about it. Millions of dollars of bags and they just forget it. We need to make sure that the client is traveling purposely and takes risk mitigation seriously. So we'll ask questions like, do they leave their bag? Do they keep their bag on them at all times? Who's traveling with the client? How much are they typically wearing when they travel? If they're playing a sports arena or something like that, or a game, are they wearing the items while they're playing? Because we won't provide coverage if they're wearing them while they're playing. So we ask a lot of additional details in terms of jewelry, things like that, because we want to make sure that the client's taking risk mitigation seriously. Same with home. So you'll see in the press lately, there's been quite an uptick of thefts in Los Angeles County for unskilled celebrities, these housewives or things like that on Bravo, and or just well-known actors and actresses. There's a huge uptick. In most, if not all cases, these clients have central station fire and burglar alarms that weren't activated. So they have the burglar alarm. For some reason, they didn't turn it on at night. We require, in most cases, a central station fire and burglar alarm. We want to know if there's a gate in the home. We want to know how the client gets into the home. We want to know where the jewelry is stored. There needs to be a safe, an adequate safe. We'll need to know the year, make, and model. In most cases, we want to know all protections put in place. We have some clients, the ones that aren't well managed, that will come to us and say, hey, I've got $1 million, tennis bracelet. Where do you keep it at night? Well, I keep it on my nightstand. That is not something that we would consider taking risk mitigation seriously. So our clientele that we want to write, typically, even if they live in an undesirable geographic location, they take risk mitigation seriously. They have the right people in place to make decisions for them. They're willing to, have pride of ownership, meaning they are meticulous with their items. They acquire new items, and they're willing to protect and put protections in place to make sure they're remaining safe. Okay, so let's get into property specifically, guys. Some questions that we ask as far as homeowner submissions go when we're negotiating on property terms for the client is, where's the property located? So we've talked a lot about LA County specifically, high brush, high TIVs, things like that. After we're researching the client, we want to secure property terms. That's probably our number one line of business on our end. So we see anything from, hey, the client just purchased a brand new home. It's $20 million coverage A in the middle of LA County. Can we secure terms? Or we see things like, this client has been with, this admitted market for 25 plus years. There's no capacity for this risk anymore, and they're getting non-renewed. Could you please help us? It's our nearest and dearest client. And we're seeing that a ton, that we have to negotiate not only non-renewals from the admitted market, but new purchases because clients are acquiring more and more than ever. Kind of just like what I spoke about, is the property gated? Is there alarms? Is there a plan in place? If it's a secondary home, is there a caretaker on the property? If it's a primary home, do you have folks entering your home at any time of the evening or day? And who's entering your home? Who has access to your home? So most of our clientele have nannies, they have landscapers, they have caretakers, they have housekeepers, they have all these domestic employees coming in and out of their home at all points of the day. We need to know the foot traffic that's coming into the home and who has access from a property and a liability perspective to make sure we're negotiating the right terms for the client. Another thing that I want to touch base on, and this is more underwriting focused, but anytime we get a submission on our end, we want to know year of updates. What does that mean? It means ideally, we want homes updated within 25 years. Wiring, heating, plumbing, and roof. We know this won't always happen. If not, we need to know that the client takes risk mitigation seriously. They have pride of ownership. What does that mean? It means the roof is regularly maintained. It means all the systems in the house are regularly maintained. It means the kitchen's updated. It means the plumbing has been updated. The electrical has been updated. All of those things make a big difference from a market selection standpoint of where we can place the risk. So kind of like when I was talking about at the beginning of the call, we get a submission from an agent on our end, and we as the broker have the ability to potentially place the business with multiple markets. Okay. If it is a clean risk with a clean client and there's full updates to the home, typically we're going to have a lot of market selection for that clientele. Now, if you have a client who's maybe not as well managed, they're in the press, they're on Twitter. Now they have an older home that hasn't been updated in 25 years and is not regularly maintained, your market selection is really going to dwindle. So knowing this information up front is really important. And that's kind of why I mentioned also working with well-established private client agents. Private client agents understand their clientele, probably have been to the home, have inspections of the property, could tell you exactly what's going on in the home, probably better than the client could in most cases. So property business, we write all the time. Our top states that we're writing in, think about it. It's where the money goes. Does anyone want to take a crack at where you think the top private client states within the country, the US, where we're writing the most business from a property perspective is?
Well, I think one big one you said was Los Angeles.
Mm-hmm.
That's one of the big ones.
Mm-hmm.
California.
California's the biggest. Yep.
Yep.
Anyone else?
Yeah, Emily typed in the chat California and New York.
New York, definitely a big one. Yes.
Florida also comes to mind.
Florida's a huge one. Yeah. Florida's a huge one. So on our end, we're seeing Florida, Texas, New York, New Jersey, Colorado, and then California and Florida. Yes. So those are our top states, if you will, from a private client property perspective, where our clientele is living. All right. Liability. This is a fun topic to talk about. Can anyone name, whether in the chat or out loud, any, celebrity that comes to mind that may have a liability concern when writing their liability insurance? This is always a fun one. I like asking this question.
Well, first celeb that comes to my mind is Kanye West.
Hey, Tendeka, that's the #1 response we get. Okay, you're onto something. So yes,
Right.
great example.
Emily put in the chat Tom Brady.
Okay. Yeah, okay. Anyone
Who
else?
else comes to mind?
Cardi B.
Yeah, that's a good one, Dylan. Yeah. Okay, so individuals that may have interesting press on them are always unique and maybe harder to place from a liability perspective. So think maybe some reckless tweets. Maybe they don't present themselves as well managed as they should be. Maybe they're changing business managers every year or monthly. And we see that a lot from some clientele, that they're changing business managers often. What other things? Rookie athletes, kind of like Dylan mentioned, that are making their reckless spending, posting what they just purchased on Instagram, whether it's the newest Ferrari, their newest gold chain, things like that. We don't want to advertise all of our exposures. And that is a major concern on our end from a social media perspective, but also a liability perspective. Other things to look at is the client facially recognized? We have a lot of clientele that, yes, they are high profile, but if you saw them at the Kroger, that's a grocery store down the street from us, would you recognize them? Probably not. So a lot of our liability markets are looking at, who the clientele is, age, and establishment. So have you been in the league? Have you been in the NBA for 10 years? Or have you been in the NBA for 1 season? That makes a big difference as far as pricing and comfortability with limits, okay? We're going to want to write someone that's been in the league for 10 years rather than someone that's been in the league for 1. It's a big difference, not only from an age and a maturity standpoint, but establishment within a career is really important and the things that you learn. In addition to that, what is the driving history? So most of these clients either don't drive or have a list of drivers that drive for them. That is a big, big deal when we're offering liability limits. A certain event that happened within the last 5 years comes to mind. This is a high profile celebrity that got in a car accident on the expressway, one of the, I think it was the 404 or something like that in LA. They hit another vehicle, and once the person that got hit realized who had hit them in the accident, immediately TMZ was called. Before the insurance company, before a tow company was called, TMZ was called. So facially recognizing clientele, driving history is all very important. Social media, managing yourself correctly, things like that. Again, this is the same story I said before. If an admitted market cannot do it, it's typically because of a profile concern or some sort of concern with the clientele, and that's why we would look at it. So looking at our end, we always want to go to our markets with the strongest, most complete submission on our end. So what does that look like? We tell you how many, followers the client has on Instagram, if they're well managed, who their business manager or family office is, how they, if they're involved in additional charities sometimes that might, present the client in a better light. We always do that. So knowing your client well is very important. And then all of these other factors from a liability perspective are very important. Last, we kind of already touched on this, personal inland marine. It's one of my favorite topics to talk about. Think jewelry, art, sculptures, collectibles. We have a lot of clients that collect high value baseball cards that range from $20 to $2 million. Where are those items kept? Is it in their basement in a room, or do they have, a separate facility that they're visiting that is meticulously maintained to make sure that they're protecting their investments? We typically want to write those individuals. Or we have some clients that collect couture Birkin bags. One bag could be $50,000 and they have a closet full of 100. So things like that are really interesting. We want to make sure we know when the items are worn, where they're stored, if they have appraisals, how often the client travels. Again, if they're traveling with $1 million purse, we want to know where they're going, why they're going. They better be holding it the whole time, fingers crossed. But things like that are really, really important to know. Our valuation changes all the time too, especially with inflation right now and different factors in our world. We want to know how much the item appraised for at purchase of sale. And then ideally, we'd like a new appraisal within every 3 to 5 years, if you will. So we make sure that we're insuring the amount for the correct amount. I've seen some really, really interesting items that folks have insured because it's a collectible, because it's something that they've got passed down from a grandparent. Not even necessarily, a rapper or a, musician sitting at the front table of the Met Ball, which we have seen as well. It's very interesting. So we get a whole slew of clientele as far as personal inland marine goes, but it's really an interesting class of business to write and something unique across your desk every day, definitely. We talked about geographic concerns. Brush in California is probably the number one concern we have, and you're going to hear folks talk about it nonstop. Wildfires are a real thing, and brush is very hard to place business. I also mentioned wind in PC 9 and 10, but I don't think I would be doing this call justice if I didn't mention excess flood and flood right now. You're going to hear from one of my counterparts, I think later this year, Brad Turner, but specifically, I want to just hit on flood really quick. Not that it's a huge factor within private client insurance, but if you're in insurance, you better be talking about flood right now. There was an article on LinkedIn. I remember I read it about a year ago, and it said, Mother Nature doesn't follow flood maps. And I think that's 100% accurate. Okay. Gonna give you some perspective. I was in LA last year in April, and I was with my boss. We were on a walk. It was 77 degrees. We both were wearing shorts. We were on a wall. It was beautiful out. It was great. It was April last year. Was there the same time April this year. The freeway to get to the valley was completely flooded. There was a tornado at the Dodgers game while we were there. There was lightning. There was flooding. It was about 53 degrees. You couldn't get anywhere. It was absolutely insane. So now I'm here in Michigan. I live in Michigan, and I can tell you right now from a Midwest perspective, flooding is everywhere and you need to talk about it. And one thing that we do on our end is we proactively offer flood solutions, whether it's excess flood or flood, on every homeowner's product when we can. We need to add value to our clients. That's something that we do in the private client space. The more value you can add, the better off we're going to be and the better partner you're going to be. So flood insurance is something that definitely should be discussed on every account, whether it's property, liability. If you're trying to establish a relationship with an agent or a client, I would definitely ask about flood insurance. It's so important. Okay. So what do successful clients and accounts include? We've talked about this, the business manager, so well-established clients. They take risk mitigation seriously. They're willing to take on a higher deductible. They have alarms in their home. They may live in a brushy area or, a wind capacity area, but they're willing to take the steps necessary to get insurance, whether that is, hiring a company to install ember resistant vents, whether that is hiring a company to clear the brush 500 feet from the home, whether it's hiring a company to eliminate all the trees overhanging a roof or things like that, whether it is hiring a social media staff to make sure that they're not tweeting in the middle of the night when they're in the club or after a game and they lost, or even having a team at this point for their wives who sometimes are getting involved with the game and tweeting things. So they have well represented and well managed people on their staff, making sure that they have a well managed profile and they are, someone that we want to write. They're a client that we want to advocate for. We want to add value. We want to find a solution. We do want to do this for all of our clients. However, it's so much easier when these type of clienteles are taking the steps necessary to get things done. The risk manager on staff, the water shutoff devices, storm shutters. So clientele that takes protection seriously to get terms. We had a client that lived in the Montecito, California area, and their home was beautiful. They're very well known, and their home has been on quite a few movies, recent Oprah episode, things like that at the time, or Oprah special rather. And the home was covered in vines. Now, if you live on the West Coast in the middle of brush, it is not ideal from not only a brush perspective, but a water perspective to have your home covered in vines. That makes the home more susceptible to water damage, mold, things like that. We asked the client to remove the vines prior to offering terms, and they did it the next day. So that's the type of client we're talking about. They are willing to take the steps necessary to secure terms that are important to them because they have pride of ownership. They take their career and their exposures and the things that they have near and dear to them seriously, and they want to make sure they're properly insured. I think that's all I had today. I know I talk a lot and that was a lot of information. Does anyone have any questions?
Amazing.
Oh, thanks, Tindeka. Thank you. I'm just gonna end with I really would love to link in with all of you. So please connect with me. I can connect you with folks within Burns and Wilcox. It's an amazing organization to work with. And I will tell you right now, the insurance space right now is a lot about relationship and partnerships. And I will tell you, we have a great reputation within the marketplace. And that's why folks want to work with us and utilize us. So I feel honored to work with Burns and Wilcox and at Burns and Wilcox. I can always point you in the right direction if personal lines or private client maybe isn't your niche space, but I will tell you, my job every day is exciting, rewarding, hard, challenging, fun. I get to look at a lot of cool, unique things, and it's just, it's a unique career, and it's just so rewarding and exciting. So I'm glad you guys all got to listen to what my day kind of looks like, and I'm excited to hear from you. So thanks again, Tindeka and Spencer, for having me. I really appreciate it.
Oh, that was
Thank you very much.
amazing, Sarah. That was amazing.
Yeah.
Any final questions or comments for Sarah before we wrap up this session? Dylan, I think you were saying something.
I had one question. First, excellent. It was digestible. I was able to understand. It was really nice. The only question I got is how much do you get paid? Do you get paid? Well, not specifically, but is it a lot? Is it low? That's what I'm curious about.
The salary range.
The salary range. Is it
Yeah. Dylan, I can connect you with someone at Burns to go over more specifically from a geographic perspective, our salary ranges and things like that. But I will say we are compensated very well. So we're compensated
understood?
very well on our end. Yes. Yes.
All right, thank you. That's all the question. But thank you again for your time.
Good
Yeah.
question. Good
Yeah.
question. Fantastic. Well, thank you again, Sarah, for your time. And for the students that are here with us, as you know, we do these sessions once a month during the fall and spring semester. We have 2 sessions that are remaining for this year for 2023. So next month's session will be on Thursday, October 12th from 1 to 2 p.m. Eastern Standard Time. Our presenting company is going to be QBE, and we're going to learn all about how to create a more confident and competent you. So definitely join us for that session next month. So thank you again to everyone who joined us. Thank you, Sarah, for an amazing presentation, and we will catch you all next time. Have a good one.
Thank
Thank
you.
you
See you
very
guys.
much.
Bye.
Bye.